Upstart stock is trading at $26.89 and is down over 93% from its all-time high set in October 2021. Shares have been trading sideways since bottoming out mid-2022, and analysts are putting their one-year price targets at $19.36 on average, which is about a 28% downside. I'm calculating a trailing 12-month revenue of $515 million, which gives us a price-to-sales ratio of 4.5 at the current price, which is actually about half of the technology industry average at 9.5. Upstart is projected to do $888 million in revenue for 2026, and if we multiply their current price-to-sales ratio by that projected revenue, then we can expect to see a stock price of $46.33 in 2026, which represents a 72% upside. Now, if you use the technology industry average of 9.5, that price to sales multiple would bring the stock price all the way up to 97.62, or a 263% upside. Their debt to equity is 1.6, which is getting up there and can mostly be attributed to that massive price decline we saw in 2022. They have beat 3 out of their last 4 earnings calls, and really I'm seeing 4 red flags here. Number 1 is that debt to equity. Number 2, the rising competition in the AI space. And number 3 is the hype driving the AI stock valuations right now. And lastly is their projected EPS isn't positive in any of the projections that I'm seeing up until 2026. And so while their revenue projections are looking good during that time, the fact that they aren't expected to see a positive EPS in the next 2 years just introduces a lot of risk for me that I think a lot of other stocks in the space are not experiencing right now. And so for me, it's unclear if investors are going to see any major returns on this stock.